Ever wonder what happens behind the closed doors of the world's most exclusive hedge funds? It's a world shrouded in mystery, where financial titans move markets with a single decision. Today, we're pulling back the curtain. We're going deep inside the realm of firms like Renaissance Technologies, Bridgewater Associates, and Citadel. These aren't your average investment firms. They're the financial elite, the 1% of the 1%. So, what makes a hedge fund exclusive? It's not just about the money, though you need a lot of it. We're talking about minimum investments in the millions, sometimes even billions, of dollars. But it's also about who gets invited. These funds are often closed to new investors, operating like secret societies for the ultra-wealthy and institutional giants. Getting in is less about what you know and more about who you know. It's a club, and membership is the ultimate status symbol in the world of finance. Let's start with the legend itself. Renaissance Technologies, founded by the brilliant mathematician Jim Simons. You've probably heard of their medallion fund, but you can't invest in it. Why? Because it's only open to employees. This fund is the stuff of Wall Street legend, famous for its mind-boggling returns, averaging over 66% annually before fees for decades. How do they do it? Not by gut feelings or market predictions. Renaissance is a kingdom of quants. They hire PhDs in mathematics, physics, and computer science, not MBAs. These geniuses build complex algorithms that scour petabytes of data, looking for tiny, fleeting patterns that are invisible to the human eye. They trade thousands of times a day, profiting from minuscule market inefficiencies. It's less like investing and more like cracking a code, a secret language of the market that only their machines can understand. Next up, we have Bridgewater Associates, the brainchild of Ray Dalio. If Renaissance is a fortress of mathematicians, Bridgewater is a temple of philosophers. Dalio built his firm on a foundation of what he calls radical transparency and an idea meritocracy. What does that mean? Every meeting is recorded. Every employee is encouraged to challenge everyone else, including Dalio himself. It's an intense, almost cult-like culture designed to strip away ego and find the absolute best ideas. Their strategy, often called global macro, involves making massive bets on the movements of entire economies' interest rates, currency fluctuations, and political events. Dalio's famous book, Principles, lays out his entire philosophy. He believes that by understanding timeless patterns in history and economics, you can predict the future. It's a bold, intellectual approach that has made Bridgewater the largest hedge fund in the world, managing hundreds of billions of dollars. Then there's Citadel, founded by Ken Griffin. Citadel is the embodiment of speed and power. They are a multi-strategy behemoth, involved in everything from quantitative trading to market making. In fact, Citadel Securities, a separate entity, handles a massive percentage of all U.S. stock trades. This gives them an incredible amount of data and insight into market flows. Ken Griffin started trading from his Harvard dorm room and built an empire known for its relentless competitive drive. They recruit the top talent from every field and push them to the absolute limit. Citadel is a high-octane environment where every millisecond counts. Their technological infrastructure is second to none, a weapon in the never-ending arms race for trading speed. They're not just playing the game, they're creating the playing field. So, how do these masters of the universe actually make their money? It's not one single trick, it's a combination of strategies. Quantitative funds like Renaissance use algorithms for high-frequency trading. Global macro funds like Bridgewater analyze worldwide economic trends. Then there are activist investors who buy large stakes in companies and force management to make changes they believe will increase the stock price. And let's not forget long, short equity. The classic hedge fund strategy of buying stocks you think will go up and shorting stocks you think will go down. The key is hedging. They trying to make money regardless of whether the overall market is rising or falling. This is what separates them from a typical mutual fund. They're not just riding the wave. They're trying to command the ocean. But it's not all smooth sailing. The world of high finance is littered with cautionary tales. Remember, long-term capital management. A fund run by Nobel Prize-winning economists that almost brought down the global financial system in 1998. Its models failed to account for a real-world black swan event. More recently, firms like Archegos Capital imploded spectacularly, losing billions in a matter of days due to excessive leverage and risky bets. This is the dark side of the hedge fund world. The same leverage that can magnify gains can also magnify losses, creating a domino effect that can threaten the entire economy. The stakes are astronomically high, and when these giants fall, they shake the ground for everyone. The lifestyle of a top hedge fund manager is almost as legendary as their trading strategies. We're talking about sprawling estates in the Hamptons, private jets, world-class art collections, and philanthropy on a massive scale. They are modern-day kings, with influence that extends far beyond Wall Street into politics and culture. But this comes at a cost. The pressure is immense, the hours are brutal. It's a 24/7 job, where a single mistake can cost billions. The burnout rate is high. and the personal sacrifice is enormous. It's a world of extreme wealth, yes, but also extreme stress. So, what's the future for these exclusive clubs? Technology is the biggest disruptor. Artificial intelligence and machine learning are no longer just tools for the quants at Renaissance. They're becoming essential for everyone. The race for data and processing power is more intense than ever. At the same time, there's growing pressure for more transparency and regulation, especially after major market crises. Some wonder if the golden age of hedge funds is over, with lower-cost index funds and ETFs gaining popularity. But don't count them out just yet. As long as there is market volatility and inefficiency, there will be brilliant, driven people trying to exploit it. The names and strategies may change, but the quest for an edge, the secret formula for beating the market, will never end. These funds represent the absolute pinnacle of financial engineering and human ambition. They are part codebreakers, part economic soothsayers, and part high-stakes gamblers. While we may never get an invitation to invest, understanding how they operate gives us a fascinating glimpse into the hidden machinery that powers our global economy. Thank you so much for joining me on this deep dive into the world's most exclusive hedge funds. If you found this fascinating, please hit that like button, subscribe to the channel, and ring the bell so you don't miss our next exploration. I'd love to hear your thoughts in the comments below. Which of these funds fascinates you the most? Thanks for watching, and see you in the next video.